Good morning, it's Tuesday, December 12th, about 6 a.m. Central Time. Overnight, the precious metals are firmer after yesterday's sell-off. You have Feb gold up $9 at 2002. March silver up 19 cents, 23.25. March copper up 1 at 3.79, and January platinum up 12 at 9.27. So gold, silver, copper, and platinum all trade below the respective 200-day moving averages. The dollar index recently has held steady, and treasury yields have firmed up. The U.S. session today will start off with weekly same-store sales, followed by the November CPI data, which is forecasted a downtick from October's 3.2% rate. Core CPI is expected to hold steady at 4% year over year. If we do see a softer CPI print, we could see this short covering rally extend throughout the session. The Federal Reserve will meet tomorrow, and Powell could push back on any expectations for that first interest rate cut. So where do we see a value on precious metals right now? We are eyeing the February and April call spreads for gold, and then also on March silver. We are looking at some critical levels of support on gold at $19.50, and then also on silver anywhere below the $23 range. So looking at the technicals, gold has triggered a bearish trend. However, I call this more of a return to the scene of the crime. If you look from about October 16th, which is when we got that breakout, it was the October 15-16 breakout over that $22 level, we kind of consolidated for about a month, right between about 24 on the upside, 23 on the downside. So we're kind of coming to the bottom of that channel right now. We've broken out to the upside, and now we've returned to it. Call it a return to the scene of the crime. Now looking at gold, gold is in a neutral trend. It's holding about the 50 and the 200-day moving average. 1990 is going to be your 50-day moving average. 2007 is going to be the 200-day moving average. So we've got a lot of action coming out over the next 2 days, so be prepared for that. If you're heavily overextended, use any kind of rally to lighten up. Use those critical levels of supports as your risk management strategy. Looking at the overnight session, the dollar index down about 34 ticks. January crude kind of mixed here, trading within about $1 range. 72 on the upside, $70 on the downside. 10-year treasury yields down 5 ticks at 4.18. And also on your indices, we've all rolled over to the March, so we'll have to readjust to those new price bands. If you got any questions on futures or option trading, give me a call. 312-858-7303. And remember, futures and option trading does involve risk of loss. May not be suitable to all investors. Good luck and good trading.